right. Hey there. Welcome, everybody. Today, man, it's Friday, the 15th of September, 2023, and it's quad witching or triple witching, however you want to look at it. We're going to talk about that today and what the possible effects are. We talk about the markets, especially Bitcoin. There's a great chart that was posted there recently by another analyst, and I'm going to share that and talk about that here. Other than that, we're going to look at Bitcoin, the dollar, stock indexes, maybe a few extra kind of charts within there. So hopefully you guys are ready for this. I'm Christopher Inks with Texas West Capital and coming at you live here from just north of Houston, Texas on Lake Conroe. It's been a little bit of a rainy last day or so, which is definitely interesting for us because it has been dry, and hot for quite a while. I think this was the hottest August on record for the Houston area. So, man, thank God for air conditioning, right? Let me see here. Let me kind of check out here what's going on. Yeah, all right. So we're going to jump on that. So let's go ahead and start with the chart there. Good to have y'all here. I see a couple people already showing up and chatting in here. I know we got a little bit late start here. My my software got, I don't know, something happened earlier this week, and it has me thrown off the entire week. So, by the way, usually every other week we have Phil Swanee on here with us. And as always, guys, that's, dependent upon his schedule. He had something come up today, so he wasn't able to make it. So I'm going to try and get him to commit to next week. And you guys can see what he's got then, all right? Let me see here. So let's go ahead and jump in here real quick, guys. There we go. So this is the chart, and the analyst is Eric Crown over at Crown Crypto Cave, Crown with a K. All right, maybe you guys know this guy. I haven't had the chance to really talk to him personally, but hopefully I will get that chance before too long. But he did this great chart here, just kind of mapped out where these, quad, triple witching events have happened, right? And we'll talk about exactly what that is here in just a minute. For those of you that maybe don't know or maybe don't have a real firm grasp on it, we'll give you the quick and dirty so you guys can sound like experts, all right? But basically, every time, other than one time here in the last 3 years, it's actually marked a reversal with Bitcoin's price, right? So if this is to continue holding where it's usually done, then, we should expect to see potentially some upward rallying here, right? And of course, we've talked about that as well. Now, nothing's guaranteed, guys. And just because it's done it, 4 times a year for the last 3 years, except for that one time, does not mean it has to do it again. But here's the thing, guys, is traders, you're trading based on probabilities, okay? And I think this is a thing where a lot of new traders have issue because we talk about, everybody out there says, oh, well, past performance isn't indicative of future performance, In other words, what's happened in the past isn't necessarily going to happen in the future. But as traders, the other side of that is, well, we tend to trade based on probabilities. And so a lot of that probability is, okay, what has generally happened in the past? Now, that isn't going to be its only thing that we work on, but we have to bring that into our consideration to figure out, because we're speculating here, what exactly that's going to mean for us. All right. So we've got this pullback here. And so, here we are. Now, what exactly is triple or quadruple witching, right? So quad witching was something that happened in the U.S. up until about, I think it was 2020 or so. And so, well, triple witching is just that the stock index futures, stock index options, and stock options all expire on the same day, okay? This happens 4 times a year. It's quarterly. It happens on the third Friday of March, June, September, and December, okay? So this is the third Friday here, September. It's triple witching, right? And you can interchange the term quad witching because that's what it used to be up until, like I said, about 2020, because up until that time, you also had single stock futures that were traded in the U.S. and would expire at the same time. So you can use them interchangeably, triple or quad, whatever you want to do here. But, what's the big deal about it? Well, the big deal is that there should be increased volume, increased volatility. Why? Because you've got, again, these contracts are all these options, these index options, these index futures, they're all ending on the same day. And so they're either going to be rolled over or going to be, completed. And then you've got the hedges with those, right? And so what happens is you've got a lot of market activity. because you got to decide if you're going to roll it over, if you're going to close it out. You got to figure out what your hedging positions are with these and everything. And so, it usually increases it gives you this notably increased, volume. Okay. And so with that volume is the volatility, but it's not necessarily bullish or bearish event. Okay. Understand what it is that it's just volume and volatility increasing. Okay. It's usually short-lived. By the next week, most often, whatever's going on with it is going on with it, right? So what's interesting is if you think of this chart here, the Crown put up here, and then you think in terms of the way that, that I teach people to understand markets and social mood and stuff like that, right? What actually happens is that it's not that the triple witching actually causes something to happen, right? It's not that it causes price to reverse or whatever, right? It just happens to happen around the time that price reverses, right? And this is, again, a big thing here. If you guys, if you can really learn to understand this, it becomes a really huge benefit to your trading. And that's what we're trying to talk about you understanding is this idea that social mood is what directs price action. The financial markets are the closest thing we have to understanding what social mood is, understanding how people are feeling. If they're feeling scared and worried and concerned, they're going to pull money out of the markets. They're not going to put money in it, right? Markets tend to head down then. If social mood, if people in general, right? So I'm not talking about your neighbor Larry or your uncle, George, or your Aunt Lynn or whatever it is, right? Your best friend Craig, whatever it is, right? Craig, anyway. It doesn't matter what that is and what they're thinking. We're talking about just the social mood in general, right? And so if people in general are feeling not so worried, then they tend to put their money in the markets. They tend to buy things, okay? So what we notice with news events are things that just happen, sometimes they happen around actual trend reversals, right? A lot of times your news events that you guys get all hyped up about are just something happened along the way, like a minor pullback in a bigger trend. Okay. So just some things to kind of keep in mind there. Fibbo is here. He says, I'm holding out for a quintuple witching. So yeah, unfortunately he's doing his thing, trying to check in here when he can. But like I said, we'll try and get him on here next week, guys. So that's basically what you're looking at. When we're talking about what's going on, right? So we looked at increased volume. Which is going to lead to, some higher volatility usually. So you usually see like the VIX maybe kind of tick up a bit, which the VIX, we've talked about that a lot, is you're hitting these 3.5-year lows recently. Okay. Now this volume and this volatility and all this simultaneous expiration of all these contracts, right? Sometimes it can lead to some sort of abnormal price movement, maybe some sort of discrepancy in prices. But that, if it does happen, is usually going to be seen like about the last hour of trading or so. And so that's that 3 p.m. to 4 p.m. Eastern. That's called the witching hour. And so, if you're going to see it, usually it's around that time. But again, this is all short-lived. And by next week, the effects of what's going on here should be done. As we get into next week again, I don't know. Again, the best way to understand it, if you don't buy into what I'm talking about with social mood, you're probably like, okay, yeah, whatever, Chris, whatever. But if you do understand it, then, again, it makes sense that, okay, all this thing that's happening here is just, temporary. It'll be done. Reversals are things that were already happening. And again, the way you can understand that better is to learn Elliott wave, right? I think probably the two most misunderstood and misused trading methods out there, and they've been around for 100 years, is Elliott wave and the Wyckoff method. And you guys, especially if you're in crypto Twitter, you see so much nonsense on both of them, and it gets you to believe it doesn't work because people are half-assing it, guys. You've got people that are just throwing up, if they're trying to do Wyckoff, they're just throwing up a schematic, and they don't even understand what the schematic is or why there's even a schematic. Guys, listen, the schematic is not there to show you this is what's going to happen. It's there to teach you the different phases and the different moves that happen, according to the Wyckoff method. But when you actually apply it, it rarely looks exactly like that, right? And unless you're doing a volume and price action analysis, generally your accumulation or distribution can oftentimes look the same. So, but you guys come in here and you don't know that, and you got other idiots online who don't know that. And yeah, I use that word because then they come out there and they talk a lot of smack, and and then they try to, bad analysis leads you to lost money, guys, period. I mean, at the end of the day, it's still your responsibility. You're taking out the trades or investments or whatever based, on whatever you're seeing. But, you've got to be more diligent about the different things that you're seeing out there, because things can sound like they make sense. And when it comes to trading and analysis, and a lot of times it doesn't make a lot. It's not, if you understand how it's done, it doesn't make sense. But if you don't understand, it can seem to make sense. Does that make sense? So, a lot of what I do here, guys, is I try and get you to understand what the half-truths and the outright lies are out there, and really learn how to apply these things much more realistically and how it should be, okay? But again, if you understand social mood, you understand Elliott wave theory, then you'll see that the news events are just these things that happen, and they themselves don't actually give the overall trend any real anything, right? They're not the reason the things happen. They just happen at those points because of what's going on with that social mood that leads up to it. So if you understand and apply Elliott wave and Wyckoff theory correctly, you're often in well before the moves get going, right? Again, it's this idea. Let me see here. Let me get rid of this and pull up my other charts here. It is the idea. Okay, sorry about that, guys. It dropped everything off there. Let's see here. Do options expire all at the same time or just on the same day at different? Yeah, they just expire on the day, at the end of the trading day. That's why you have the witching hour at 3 to 4 p.m. Eastern. That's why, because often it's like, okay, how's the day going? And it's the very end of the day that they actually do whatever they're going to do with those contracts right before they expire. All right. So yeah. So again, if you understand the Wyckoff method, if you understand Elliott wave, then you're like me and you understood this was the beginning of accumulation over here in June of last year, right? This didn't surprise you. This is nothing than a terminal shakeout, a really heavy spring basically that comes down here. And when it does that, it often creates its own little range here, its own little trading range that leads into the breakout and the finishing of the other trading range and the rally up, okay? So, you're going to get a lot of people online. They're going to talk a lot of smack because they don't understand how things are done, right? And it's unfortunate because, again, if you're newer to trading and you don't understand, a lot of the things they say are going to sound like they mean sense. People are going to go, oh, this can't be the selling climax over here because the volume is not the greatest volume, and selling climax means it's the greatest. It's the worst. No, that's not the way. See, when somebody tells you that, understand that they don't understand Wyckoff, that they've not actually learned it, okay? I'm going to give you guys a real quick understanding here, okay? Your greatest volume on your drops, right, are going to come at your preliminary support or your selling climax, because the preliminary support is the first drop into the area where the volume kind of picks up, right before the selling climax, right? So you have your pop down here, which gets you this move back up, becomes this redistribution here, right? And then you drop on down here again to the big volume, large candles, large lower wick, and you get your preliminary support. And then you go into your selling climax. In this case, because so much of that supply has been soaked up in that preliminary support, the selling climax doesn't have as much to deal with, right? So that often happens. And then you have this, and again, this is the spring or the terminal shakeout that comes after the selling climax. And if it's a terminal shakeout, what you'll usually get, what you will get is a lot larger volume than what you had at the selling climax, which then requires a retest on lower volume to successfully retest to lead to a rally up, okay? But again, guys, if all you got is some Yahoo online throwing up a chart, one of those schematics that says, look, this is accumulation or this is distribution, they might get lucky and get it right, but you have to understand what's going on with your volume and your price action. You have to understand what are the phases, phase A, B, C, D, and E here. You know, what are they doing? What are you looking for? You have to understand when you talk about your automatic rally or your selling climax, your preliminary support or your secondary test or your terminal shakeout or your last point of support. You have to understand what are you looking for there in terms of volume and price action. That's what the schematics are set up to do. They're to give you an idealized way when you're learning Wyckoff of how, you know, ideally you would love to see price action move, but it's rarely looking like that. There's often much bigger discrepancies in movement from that. So you have to actually understand what the phases are, what the, you know, what the different nomenclature is, what it means, what you're looking for to actually approve, to work with it, right? So I'm just trying to give you guys this heads up because, again, you're going to see a lot of this nonsense online and you'll be like, oh my God, but, and then, you know, it'll be wrong and you won't understand. You'll say, oh, it just doesn't work. No, it works. The person doing it doesn't work. That's the thing. Okay, guys? Kimosabi here says, so many Wyckoff posts with no volume profile pet peeve. Yeah, I mean, it drives me nuts too. And it drives me nuts, not for me personally, but because I know so many of y'all are out there looking at that and going, oh, yeah, okay, yeah. And you're getting completely screwed on it because you don't know, you've not even studied Wyckoff, so you don't know what you're looking for. And the way they make it sound, they put up the picture, goes, oh, look, it looks like the picture. And, you know, and it's easy to get caught up in that and go, yeah, that looks good. But I need you guys to understand that if you're trading out there, if you're investing, remember, at the end of the day, it doesn't matter who you're listening to. You have the ultimate responsibility for your trades, okay? You have the ultimate responsibility. It's you because you're the one making those trades. Nobody else out here, not myself, not Fibbo, not Crown, not anybody else. We don't have any, we don't get any money from, you know, from your account when you're trading it or, you know, when you're making the trades or whatever. We get no benefit from that, right? Now, you are going to have people online that are going to, you know, try to get you into things just to, you know, to use you as liquidity. It is what it is. But that's why, you know, again, guys, stop being so stubborn about actually learning and about, you know, sometimes, you know, paying for a coach or a mentor or some kind of education. I'm telling you guys right now, as somebody who had to learn that the hard way myself, you know, almost 30 years ago, I'm telling you, it's going to make it's, if you're learning correctly, it's going to be worth more than its weight in gold. All right. So speaking of gold, gold and silver had a good run this morning here, popping up. We'll see if we can pull up a chart on that as well. Okay. But this is still, you know, this is my, my macro kind of look at the bottom here of what's going on with Bitcoin. Most recently in this area, you know, again, I've got this as reaccumulation. The volume and price action does seem to support it right now. We had this bullish engulfing candle off the swing low. This is the Bitstamp chart, the Bitcoin USD one-day chart on Bitstamp, okay? And so, you know, we've got this red line here. As I said here, this red moving average is the 21 EMA. And you can see that right now we're kind of doing something similar to what we did over here back in June, mid-June. We're kind of broke out above it, pulling back to it. We'll see if we can find some support around this and continue to rally up. But here's the thing. This right here is bearish market structure coming off this swing high. This is about 31,600, okay? Or 31,800 here on this chart. This is bearish market structure. This is a high, low, lower high, lower low, lower high, lower low, okay? So what does that mean? Why am I pointing out? Because ultimately, guys, everything else aside, what I'm looking for is impulsive breakout above the daily pivot here, this blue pivot right around 27,150, 170, right around there. That carries above this last lower high. Because if you don't have to close above it, but if you break out above it, that breaks this market structure, this bearish market structure. and it says, hey, we're in bullish market structure coming off the lows. Now, that doesn't mean we can't go up and come down and make a new low, and then you have this larger, high, low, lower high, lower low, larger bearish structure. But, if you're trading, especially if you're trading price action, you have to understand what market structure is. And getting out above this point leads to higher up, okay? Or should lead to higher up, right? My thoughts are if we're getting above, above this, impulsively above the daily pivot, that should carry above that and take us up into 29, 30,000. And if we're up there, then ultimately we should break out here. And that gives us, like a $50,000 target as the next big one, right? Because my Elliott wave count says 1, 2, 1, and then a flat here is 2. By the way, even if we were to break down here a bit, maybe hit this S1 pivot on the daily at around 24,100 or 150, or even a little bit lower, maybe this high volume node here at 23,000. That would, I would assume right now from the way this volume and price action is printing out here, I would assume that would be a spring, kind of something similar to this, but I would expect it more likely to be just like a wick down and then a close back up here and rally back up and head up. So I'm not even overly worried if we were to get this breakdown here. But if we are breaking out above this 28,140 kind of area right here, this last lower high of this bearish market structure, if we're breaking out there, my thoughts are we're going to, that the bottom's in here and we're going to break out higher. So anyway, so I have, again, the 1, 2, 1, 2 here, right? And as that, if that's the case here, then this 1 and then 2 is a flat here, right? Gives us basically here on Bitstamp, it's a $52,000 target. Okay, so this would be 1, 2, and then this would be 1, 2, 3. You'll get a 4, you get a 5, which then just becomes 1, 2, 3 up here, 4, and 5. And what normally happens with Elliott wave, guys, again, things that people don't normally teach, right, when they're teaching Elliott wave, is that this first subwave here, so let's say this is, 3 and this is 4 down here. We've got wave 5 going up, right, to the new all-time high. This first, again, 1, 2, 3, 4, 5, right, should terminate right around, most of the time, right around the previous swing high. So it should kind of expected to get up into this area. Sometimes a little before, sometimes a little bit after. Okay? And that would explain to you why people get caught when they try to buy the breakout, right? All of a sudden something hits as a breakout to a new all-time high, and then it gets rejected, 10% up or something like that, and then it comes back down. Because everybody's waiting. They get trapped. They're long to get trapped on that breakout, right? They go long on the breakout. Same way as these guys went short on the breakdown and they got caught, goes back up without them, right? Same thing, happens here. Right here, look what happened locally here, right? Boom, bah, and then you get sent back down. But, this happens enough. It doesn't have to happen all the time. Nothing always happens, okay? Nothing always happens in trading. The closest thing to a guarantee in trading you get is something that Mr. Fibbo likes to talk about, which is you're going to lose money. That's the truth, guys. You have to learn to lose money, but you have to learn to lose money correctly, all right? Because if you don't, that's where you end up, you hold on to your losers too long or you get out of your winners too early. That said, nobody's ever lost money taking profits. So you have to kind of keep these things. There's a lot of things that we say, and the longer you're in trading, the more you understand them. If I tell you nobody's ever lost money taking profits, and you're not a very experienced trader, you'll go, okay, so I got to take profits. Well, yeah, okay, yeah, you have to. But then you won't understand why we say, okay, well, you took your profits too early. You see, so you got to be careful with that as all. The big Warren Buffett thing: buy when there's blood in the streets, right? Well, what does blood in the streets mean? It's something that's easy to say, but until you've actually been through the market for a while, you don't get a real appreciation for what it means. So I tell you that so that way you guys can be careful when you're hearing us talk about these things and not just immediately thinking, okay, this is my unexperienced opinion of what I think it means. Because there are nuances and everything, right? Ross Mark says, something I never understood. Why is volume always highest at the extremes? Shorts being more aggressive near the lows rather than the highs? For example, when an asset is at the day's high, it's next to impossible to have follow through for a short while if it's trading near the day's low, then the following through in the short is insane. Even with longs out of the low of a range are very slow to move, while longs near the high of the range are always faster. Yeah. Exactly. And that's exactly what you learn with Wyckoff. Okay. Because what it is these spikes of volume that you guys see down here at the extremes of movement, coming out of the lows, coming in at the tops. You get all this, you get all these little candles up here and you see that volume picking up, right? Or you get all this, this move down in here and you got all this volume picking up compared to what it was, right? As you're here, barely making any lower low, right? What this is, these big volume spikes, these are your big players. These are the guys and gals that you are trading against. These are the professionals who understand what they're doing and they have some size to them. And what they're doing is they're catching when you sell into your thing here, right? You can see the first bit of volume came right on the breakdown here. There's this this little wick here, right? And back up, and then more volume again came in, and more volume came in again, and more volume, all this, right? This is your big player setup here. They're the ones catching all that you're selling into that single kind of area, coming into that single area. And that's why you get these short stops like this, or even right here, right? Coming into this. Remember, your top and your bottom are not the highest and lowest price. Those are just events. The top is a range, it's distribution. The low is a range, it's accumulation, right? It takes a while to accumulate all that loose supply that you have as retail. Why is that important? It's not just you though, but it's short-term traders as well. It's not just people who don't know how to trade and who are scared and FOMOing in and all this other stuff. It's also people like myself and Fibbo, people who are out there trading shorter term. Weak hands doesn't. I know crypto Twitter tends to use it as a derogatory term. It just means somebody who's selling sooner rather than later. And again, if you're a shorter term trader, that's you. Doesn't mean you're scared that something's going to happen, but you say, okay, I got in this trade. Here's my target. To hit my target, I'm getting out. So what happens if you're a bigger player? You're collecting all that. You're getting all of that. Why is that important? Because when it's time to mark up, right? When it's time to mark up here, you want to make sure that there's not as much supply out there with retail. Two reasons. One, if you can collect it down here, then you're making money as it rallies up, right? And so the more supply you can capture, the more money you're going to make as it rallies up. Two is the more supply that it takes from the average retail investor out there, the average retail trader, right? And then the shorter term traders, the more supply that goes out into those longer term hands, the less supply that can come in and stop the movement as it goes. And so it's the same thing at the top end, except you as retail, you're buying into that ceiling, into that big play, into those big players. And so you get that spike of volume at the top there because you're all buying into it all excitedly, fear of missing out, right? And they're there just catching all that or you're buying up there, right? And they're selling all into everything that you want to buy. They've amassed all this supply and they're just dumping it on you, right? And you're just greedily sucking it up, right? Until there's not enough of you left anymore to suck any more of it up. And it pushes down, right? And so now you don't have any buying pressure left to catch it, to buy as it comes down, right? So it just continues that trend down. So yeah, I mean, that's real quick. That's the base. That's why you get your extremes of volume toward the top and toward the bottom most of the time, because that's what's going on there. Let me see here. Chris, what's up, man? He says, if BlackRock is now bullish on Bitcoin, why wouldn't the largest fund in the world manipulate price lower to accumulate and destroy their competition? What do you mean they're now bullish? No, you just know that they're now bullish. You guys, you have to understand the big, when you think in terms of, you've got to think in terms of size, okay? If you're in the markets, and again, especially if you're thinking about stocks where you have companies, large companies, Apple, right? Microsoft, stuff like that, right? Or when you're thinking of big companies like BlackRock, right? These are big, huge behemoths. They can't do anything overnight. If BlackRock says I'm bullish, understand that they've been putting things in motion for at least a year. There's no way they just woke up to say, oh, now we're bullish on Bitcoin. Oh, here's our ETF, right? So they've already been putting this together and figuring it out. Okay. I wouldn't be surprised if your big players like BlackRock or whatever were with the other big players down here soaking up all this supply, all these areas here, right? And even down in here, right? So yeah, it's not that these big companies, we just hear that they're now bullish, but these things take a while to get going. They're big companies, got lots of people that have to answer to other people, that have to, somebody has to suggest it. It has to go to committee. It has to go to whoever the boss is. They got to take it to their boss. They got to go to another committee. They got to go to their boss. They got to sign off on it. They got to, change it if they want it. Maybe it's like, okay, yeah, but let's look at this part of it. Go back, change it, whatever. It's kind of like Congress, right? It takes forever to get through. Or the SEC takes forever to approve something, right? Same idea. So just because you hear somebody big is doing something all of a sudden, just understand that means that this has been something they've been putting in movement for a while now. Something they've been working on for a while. It's nothing that just happened overnight when you heard about it, with the ETF filing or something like that. Okay, guys. Now, especially that's important when you're thinking about something like Bitcoin, where you're looking at companies that are going to accumulate, right? The other big news that you guys may remember from the other week was that the accounting rules, right? The way that companies can now use fair value accounting, it's going to go into effect in 2025, but they can opt in to start using it now, which means that these companies who might have wanted to get in Bitcoin but were fearful of doing it because putting Bitcoin on the books and the way that they had to account for it previously, when Bitcoin pulled back and made lower prices after they bought it, it brought down the value of their company, which then made it difficult for them to get debt and stuff like that. Because these big companies, they all run on debt, right? I mean, look at Michael Saylor, right? He's always issuing debt to buy more Bitcoin and whatnot for MicroStrategy debt, right? So now with this fair value accounting, they don't have to, it won't bring down the value of their company now when Bitcoin's value dips. And so now they have less of a reason not to actually get involved. So I think that's probably a bigger event than even the ETFs. And I think that's going to be a bigger driver, I think, of Bitcoin adoption or holding it over the next few years than even the ETFs will be, I think. But either way, both together, it is quite a big, right? Okay. Let me see here. Is it true the Bitcoin spot ETFs are 1-to-1, meaning if the fund has 50 billion in assets, they BlackRock have to hold 50? I believe that's true. I haven't looked at it, that, but I believe that would be true. You have to have, what you've got in there, right? So as people are coming in and doing it, you got to buy in more. So yeah, I would look at that. I don't know. I don't have it pulled up here anywhere. I'll get back with you on that. But I think that's probably the way it's going to have to be in there, right? Because otherwise, what are you doing? Your ETF is holding that thing, right? That thing, whatever it is. In this case, Bitcoin spot ETFs are holding Bitcoin, right? That's what you're getting exposure to. So what else are you going to hold in there, right? Because all of a sudden you're not holding Bitcoin. Anyway, let me jump on here real quick, guys. Let's see here. So that was that with Bitcoin. Still not hating it. Still looking all right. We want to see, basically, I want to see the, let's pop this on 12-hour here. I want to see this area hold this support now. If we can see this area hold this support, where we are here. Right now, we're just dipping, as you can see, into the low volume node. We're getting a bump up. That's perfectly expected. Again, you got the rejection initially here as well. But we want to see this whole area kind of hold here, potentially all the way down to the hourly pivot, right around that 25.8, 25.880 kind of area maybe on this chart. If we can see that hold and breaks that higher, then all of a sudden we're really looking good for this, this breakout. But we want to get above. I'm telling you guys again right here, you want to get above this 28,100 and change, depending on what chart you're looking at. This last lower high in this bearish market structure coming down here. Okay. So that's what you want to see. that is the thing you're looking for. If you can get over here, an impulsive breakout above that daily pivot, again, right around that 27, 150, 170 area, depending on what chart you're looking at, right? If you can get an impulsive breakout there, so large candle spread, large spike of volume, closes above it, then the odds are significantly increased that you're going to break out above that swing high. And again, that opens up the move to 29.30, and getting up there should see it. I mean, I'm not saying it's going to be a one shot out, but should see it ultimately, bottoms in, and it's breaking out higher there and heading up. Okay. So that's kind of what we're looking at on there. Let me see. Let's take a look at the Dixie here, the dollar, right? This is the bigger count. So I put this together the other day, and I can't remember where I've shared it. I think I shared it there on Twitter. If you guys aren't following me, man, follow me. Follow me, subscribe to the channel here, whatever you're watching it on. We simul stream across Twitch and Facebook and Twitter and YouTube. So follow me, subscribe, like the video, guys, please, and thank you. Leave a comment. Would love to hear from you. I think a lot of people get on here and they get personally offended if you don't say what they want to hear. And I'm not interested in that, guys. I'm just interested in listening. Listen, here's what I think's going on based on these things. I've been doing this a long time. Doesn't mean I'm going to be correct every time. But that's why, again, I continue to push the importance of proper risk management, understanding your validation and invalidation levels, okay? But this is what we're looking at here. And to me, this looks like a large flat correction here printing. Just basically a series of threes, right? Well, I mean, here you have a 5, right? And then this is ABC up, ABC down, 1, 2, 3, 4, 5, potentially done. And then we'd look for 5 down, right? Take around that 70 area. Now, I do have another possibility, and this kind of depends because there's a lot of sideways here, right? But what if let me see, how do we say this? Okay. There's a couple of different ways to look at this where we actually get this 3 up here rather than where we're at, okay? And that would be 3, and then we'd have a 4 here playing, and the 5 would go up here around 125 probably, 126, okay? If it's done here, the idea potentially being maybe like an ABC and then rallying back up here. I don't right at this moment think that's what's going on. I think this is the better count here. When you're doing a flat, wave B is just looking to get near wave A. So, again, if we're looking at Bitcoin, you can notice here that it's, on this chart here and other charts, it didn't actually break down below this here. Now, on some of them, I think it might have, the leverage exchanges, right? But on the spot exchanges, we've got a higher low here. So you have an A, you have a B that breaks it above where A starts, and then 1, 2, 3, 4, 5 down here. ABC is 1, 2, ABC is 3, 4, ABC is 5, kind of idea. Finishing out wave C, just near where wave A would be, okay? So that's kind of the idea here. Wave B terminating near where wave A is. But if it does break out higher, again, still terminating near where wave A is. So what I'm really interested in is, do we get the rejection here in this sideways and all this overlap here? Do we get the rejection here? If we're not, based on this is the monthly chart here, I mean, I'd be looking up here around 108 to 109. It's this area right here where you got all these wicks. And then up here potentially even to 110, 111. Because, it doesn't guarantee. Again, I'm looking at this as potentially a flat correction here with a 1 and then an A and a B, and working on a C here as a 2, right? So, again, could get finished in this area, could go up to those 2 targets I talked about. But, if we do end up breaking out, that's just going to suggest that this is 3 over here and this is 4 over here. And then we have 5 up, which gets us that 125.7 kind of area. 125 to 126 target, and then at that point, boom, would be the way it is. That's kind of where I'm at with that. You can see here on the weekly that we are topped out and overbought and starting to cross bearishly now. You can see that we got this spike of volume here on the weekly, on this weekly. You see how it was lower here? We got a much higher spike up here. And the weekly is just printing this doji. So, I'm going to watch that come next week. I'm going to see how it ends today, watch it next week. Because with all this volume kind of spiking here up near the top, again, that's what we were talking about earlier, where you kind of run into the bigger players, right? This isn't the DXY itself. This is actually the dollar futures chart, which is just, if you want to trade the DXY, this is what you're trading on the ICE exchange, okay? But you're trading these futures contracts on the dollar, on the DXY, basically. But yeah, so I want to see, how does this play out? You can see that we're just getting up into this supply in this wick here from the week of March 6th. So, I mean, that's all we're at this moment. Right here, right? Let me kind of put this in there. So as you can see, we're just kind of hitting the EQ of that range. That's all we're doing. We hit it last week. This week we're doing a just slightly lower low, a lower high, and a doji on increased volume. It looks like it might be setting up for a breakdown here, but we'll have to see. Right now, the weekly pivot is holding here for this. So yeah, but if we are breaking down here again, my thought remains this larger count here, which is okay. So we've got potentially 5 waves down toward 70 to finish out what appears to be a flat here playing out. So in case you're wondering what the larger count is, that's what it is, guys, and that's what I'm looking for. So we will see how it plays out. An Elliott wave, we can do our wave 2-4 channel here. I mean, this is perfectly formed, basically here. And so, if you're an Elliott wave, you usually draw a channel from wave 2 to wave 4. Wave 3 at the top there, and wave 5 usually gets near it. And that's what we have here. So, I mean, this would suggest, again, even you looking at Elliott wave here, even the channel is working in as it is there. And doesn't mean it can't go up higher. Doesn't mean it can't, continue to push up there. But, again, we'll look and see how this plays out locally here now next week, especially coming in. When looking at SPY, NASDAQ, and got a question here. When looking at the SPY, the NASDAQ futures there, the S&P futures, it looks like it's in a B with a C to go. These charts on the 3-day almost look like a head and shoulders. Thoughts? I don't think so. Let me see what you're looking at here. So here is my S&P futures chart. Head and shoulders. What are you talking about here? On the 3-day. Yeah, 3-day here. Where are you talking about? Guys, it's a lot of range here, right? It looks like it's in a B with a C to go. You talking about C coming down here? For me right now, this is ABC here. This is 1, 2, 3, 4, 5 as a leading diagonal, and then 1, 2, 3, 4, 5, because we broke then out above the mid here. Oh, you think this is maybe A, B, C coming down here? Potentially. I've got this right now as a 1, 2. As you can see here, 1 and a flat is a 2, and then 1, 2, 3. And so far, we've pulled back 38.2. We've pulled back 38.2. I do have a kind of, let me kind of zoom in here a bit. So I've got this here as an ABC and then ABC. So basically, it becomes a WXY for wave 4 here, right? That's what I think it has. Looks like a leading diagonal here. So ABC is 1, 2. AB 1, 2, 3, 4, 5. C is 3, 4, and then maybe an ABC is 5, potentially down here, and so it's pulling back locally here. Maybe we did break out above what would be that wave X at 45, 44 and 3/4. So, you know, if this counts correct as a WXY, then the bottom should be in here. And if this is, say, a leading diagonal here printed, done and printed here, you know, we'd look to fill in the gap. Filling in this gap over here, what is this? On Thursday? From Thursday of last week, this gap. That'll get us a 50% pullback there at 44.58. So yeah, if we continue to break down below this swing low here, at 44.95, I'm going to look right there at 44.58 is my next potential target. 61.8 is right there at 44.32.5. I'd look there as well to see if maybe we've got a 1-2 here before we break out higher. Right now, we've got a minimum expected wave 3 target up here at about 48.1175. And as you can see, that then is going to bring us to a new all-time high there as we do that. So we'll see how this count plays out with that. No, if this is a WXY, I mean, this is an ABC for W, ABC for X, ABC for Y. Now, if this whole thing here, WXY, sure, you could potentially be that. And if we were to break down below the swing low, we'll look here at the 50% retracement at 42.41.25. So yeah, it is possible this could still be maybe like a W, an X, and a Y, or if this count isn't a WXY, if it's an ABC, you know, it could be an A, a B, and a C coming down here. But basically, we're just looking at extensions here. So as we come down here, I've got those targets I'm looking at. If we do break down below the swing low, it just means that wave 4 is still in progress toward this 42.41.25 area, which, as you can see here, is that low volume node, right? And in that case, we'd look for a breakout above this, you know, recent swing high here at 40. What is that? 45.66. Or break, you know, if we break down below that, breakout above that'll say, okay, wave 4 is done now, and wave 5 is in progress, and then we'll have a higher target on that. So yeah, could potentially be, but also remember we do have this, you know, minimum expected wave 3 target up here, and then we'll have a wave 4 pullback, and that wave 4 pullback is likely to fill that gap in as well. So we don't need it immediately here. It could be that up there. So for me, I'm waiting to see, okay, do we get the pullback to these levels I'm looking at, or do we shove down below it and drop below wave 4? In which case, then I'm looking for the reversal down here. And then I want to see a breakout above this mid-range here to suggest that wave 3 is in progress, which, again, that target will be higher because you're pulling back lower. As a matter of fact, if you did hit that 50% kind of area there, that'd give us a wave 5 of 3 target here. Yeah, right up there around 4,900. Would be that wave 3 instead of 48.11 there. But even if this is a 1 and a 2 pulling back toward this 50%, you get that toward that 50%, this should overextend up here toward 49.41 anyway. 49.41. So like I said, minimum expected right here, 48.11. That's based on the height of this current possible wave 4 completion here. And so we just need to see a pullback and then breakout higher to kind of keep this, and then potentially 49.41 is its secondary target. But if it does break down, we do have that lower 50% target over here. And then we'd look for the break back up there toward the 4,900. Okay. So yeah, that's what I would look for on that. Or I guess not that. I guess if we pull back to the 50%, it wouldn't be off that one to be here. So I'm sorry, that would be minimum expected 48.11 or even 48.3750. I had to move that down because I had this just in case it went up higher here. But yeah, if I'm looking at this again, it looks like maybe ABC is 1, 2, ABC is 3, 4, ABC is 5. Looks like a leading diagonal coming off that. So that's what I want to see on that, okay? But yeah, I mean, that's where we are. Ultimately, though, higher. Ultimately, though, new all-time highs, right? And that goes, you know, it goes in against a lot of people who've been continually arguing against it since we were down here. Remember, I was the one talking about this as, was to potentially be like the end all be all, and then it was going down, and we didn't really have any kind of blow off top, right? Which is what you generally expect, because we're looking at this as a super cycle top here. And so a super cycle top in stocks, normally, stocks don't have a blow off top. But when you're getting above a certain degree, you're getting up there above, intermediate or whatever up there. So super cycle and whatnot, you should kind of look for that more blow off top. And we didn't get that. So remember, that's when we were coming down here, and I said, well, maybe this starts to look like maybe we've got a reversal. We're having new all-time highs, remember? So, again, guys, the lesson to learn there is you can't be just married to whatever you think has to happen when new information is coming in. Again, the fact that we didn't get the blow off top suggested this would just be like a wave 3 and a 4 here, right? So now we've got the ABC. We broke out above it. Should suggest that we have higher up, right? So let me see here. Let's see. So we got the, real quick here, guys. Check this out. I don't know if you guys pay attention to live cattle futures, right? I'm working on the Elliott wave count here at the moment, but big news here is we had this is a quarterly chart. These are quarterly candles, 3-month. Okay. And you can see that we continue to push higher and higher. These are the live cattle prices here, guys, which means if you're like me and you like to eat steak, it's going to continue to get more expensive for now. We do have, now we don't have bearish divergence here, right? You might be tempted to go, oh, well, look, we have lower highs right here. We got higher highs. But really, here's the thing. From the high to the low here, right? And then we get a low to the high. So we had that. And then we had this kind of bearish divergence again, right? Gives you the low here, which gives you bullish divergence. So this swing high here is off these recent swing highs over here, right? It's not off this one over here. This movement is done here. So you have to look at, these other highs here, right? So if I'm looking at that, I'm like, okay, well, yeah, I don't like that. I think we could be coming to a top and a pullback, and then a rally up for like a final, maybe toward this resistance here. I think we're nearing a top somehow. I mean, again, the quarterly, we're pretty up on that. Monthly, again, really well overbought here. You can see I don't know if we've ever been this overbought. Oh, yeah, look at that. By far the most we've ever been overbought on it. It's almost like a straight line up, right? I think we're closing in toward a top here. Again, the weekly's looking like it. The monthly's looking like it is. Weekly, we're getting overall, again, kind of like on the quarterly, you're seeing overall that the momentum's falling off. You do have a bit of room here to rally up a bit higher. You've got volume kicking in on these last 3 weeks here as we broke out. You see this right here? You see how your volume dropped off here as you were going sideways, and then boom, kind of shot out there, right? These last 3. And that got you right here again across this weekly resistance. If I look at, if I'm looking at this looks like, looks like 1, 2, 3, 4, and then we're getting a 5 here. So if it is, based on this, we should be minimally looking up here probably around 191.75 maybe. Now, it doesn't have to get up there. These are just our, our initial targets that we use. Generally, this is the way price acts, blah, blah, blah. But it gives us some place to start when we're looking for, okay, where are we heading here, right? Live cattle futures, how Texan of me. Yeah, so right there, again, something I've been trying to show a lot more of lately, just basically looking at charts and overall momentum stuff, right? We've got higher lows here. into this resistance area, right? And then that leads to the breakout. So I think we could go up a bit higher there. But I haven't finished, like I said, I just pulled this up, and I haven't actually finished looking at those counts yet and how we're looking here. But man, oh man, it just keeps on pushing up there. So I do think we can get up here, though, and get a pullback. And, you know, the pullback would last a bit because remember, these are, again, if we switch out here to what we were originally looking at, these are quarterly candles, right? So you look for a bit of a pullback. You know, might take a bit. What price could come off for a bit, and then one more final Yahoo going on, right? With that. But again, you know what I was talking about there locally, same kind of thing where we're looking here at Ethereum. If it pulls up, we'll see here. Okay, so Ethereum, we've got, you know, same general idea, right? You've got higher lows into this consolidation, into this, this resistance area. So you're consolidating in toward resistance, looking for the same kind of idea on the futures here for the cattle. Again, that idea that you get that breakout, that impulsive kind of breakout from that. So that's kind of what I'm looking at here overall on this movement. You notice that volume's dropped off markedly since you hit almost this. Well, was it the swing low? I think this was the swing low. 10 was this 1071.11? This is 1073. Yeah. So at the low here, it's a big spike of volume and got this thing in the way. That right there. Ever since then, volumes continue to just fall off as it's rallied up higher. So, you know, that's my big thing I'm kind of looking at there. We've got this bullish SFP here. So we've got this local range right here, right? You had this rally up, fall down. It gave us a bullish SFP. It dipped just below here. The low on this week, on this previous week here, was 1540, and then this one was 1530.60. So almost $10 lower. Rallied right back up. I mean, look at this. This is beautiful, guys. When you're looking at ranges, you rallied up, right? So your range is here. The equilibrium, the EQ of the range is right here where the previous support resistance is, right? Going all the way across here, right? But in the range, it also adheres to it. Barely dips down below. Wicks are here. Wicks are here. Even here where it wicks down, it cools back up, and it, you know, it opened actually at that point, dropped down, rallied back up, and is trying to close back above that. So you like to see those areas hold like that to see for some potential going up here. Now, the other day, you know, it's pulled back today. The other day, this thing was almost a hammer candle here. So I said hammer candle in progress, and it was potential bullish engulfing. Again, we've pulled back right here. But we'll see, you know, if we can get this up here. Stochc RSI is, you know, bottomed out here and oversold, rallied up. It's curled up and crossing bullishly right now. But the week does not close until, you know, the end of the day there was like around 6 or 7 o'clock in the evening there, Central or Eastern time on Sunday, right? So let me see here. So that's what we're kind of looking at there. And so, you know, based on the height of this structure, right, based on the swing low to the swing high here, breaking out would have us a target up here, you know, a $3,074 run up here to around 52.32. So, you know, just a real generic kind of way of looking at it. But that's kind of what I'm looking at, right? Now, we do have counts, you know, 1, 2, 1, 2. Be similar to Bitcoin, right? We get the breakout. So, yeah. That's kind of where I am with that. Yeah, we'll leave it at that. That's where I am with that right there. If you guys are paying attention, I posted this Carvana chart here. Look at this, guys. This is the weekly chart from Carvana. I don't know if you guys are really paying attention to what's going on, you know, when people are talking about stuff and whatnot, but man, down in this area, when it dropped down here, you know, below $10, they were like, oh, it's the end of Carvana, you know, because you had, you know, new all-time lows here, right? Oh, man, it's the end of Carvana. It's dead. It's going to its death now, right? And I talked about it a few times. It came all the way down here to $3.55. That was the low, guys. It rallied up, pulled back, almost hit that low again, right? $3.62, and then took off. And look at this, guys. 280 days, 280 days on the weekly, right? About that. It's gone up 1,510%. 1,510%. What do you guys think about that? I mean, you guys, a lot of you guys are in here because you're looking for these big moves with crypto and whatnot, but these big moves still happen elsewhere too. And if you've got the skills to trade, you can take them to other markets, guys. You don't just have to stick around in crypto when there's nothing going on. You can jump into Forex. You can jump into stocks, right? Yeah. So now we've rallied up here, and now we're at this resistance, right? Which we hit back over here the week of August 1st of last year, the week of August 8th of last year, the week here of July 17th of this year, and then this week. We're all hitting this. What do you think is going to happen? Now, it may pull back first, but really, what do you think is going to happen there? It looks like it's ready to break out, right? Interestingly, I mean, again, I always tell people, my students to look left, right? You look left because look at this. Hit it, rejected right there, came back, found support right in this area, right? Which is this right here. Let's draw this real quick. There we go. Dipped into it, higher low. Boom, took off, came back, retested as support, rallied up, pulled back. Where does this pull back to? Again, just look left, guys. You can find all these targets once you kind of really get used to it. I'll even pull it from here. Look left on your chart. Look at that. Support, 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 resistance, resistance, support, resistance, support here, support again. So, I mean, really, really good moves on that. Again, wouldn't be surprised to see it take, from around this area to take some sort of pullback. But, man, oh, man, the breakout there should be great. If we look at the height of this structure here, that would give us, based on the height here, a target. Maybe up here of 894, right? And you go, well, no, there's no way. How the hell is it going to happen? Well, so think of this, guys. I just posted a tweet about the United Auto Workers. They went on strike. Okay. And so what happens? Auto workers go on strike. What happens? Production stops, right? At GM and and these other places, right? And so who then benefits? Well, because then if you've got production stopping, the amount of vehicles available are going to go down, right? And so if the amount of vehicles going down, then these companies who work here to do the secondhand vehicles, Carvana, Vroom, stuff like that, right? I mean, all of a sudden, there should be more buying pressure for them. Right? People coming in, you're buying secondhand through them, right? So, I mean, if you need a narrative, I mean, there you go. I don't need narratives when I trade. I trade the charts, but if you need something to help you think, there's something you can think about. Crazy, right? So Carvana not looking terrible at all. Coin overall, I've still got this 1-2-1-2 going on. If we jump this out here to the week, looks a little cleaner here. Jump across the creek here. It's this large spike of volume, this large candle spread through the resistance. Back up to the edge of the creek. Looking for the rally up higher now. We'll see if we can get this going off here. But this gets us a wave circle 3 of 3 up here at right around 312.20. Right back up into the initial range from when it first came off. So I think, there's a lot of potential here still for for coin. And if coin's going to go up, then Bitcoin should be going up, right? Coin's not going to go up like that without Bitcoin. So, again, you can watch coin and Riot and stuff like that and go, okay, well, see how these things are looking, right? I do have a SPY chart. We were talking about E-minis. So there's my SPY chart. Same idea again. Either 4 is done, or we'll come on, drop down here a bit to get 4, and then we'll get 5 up here or up a little bit higher. But same general count going on, whether you're looking at SPY, S&P, futures there, whether you're looking at just all these different indexes for stocks. They seem to be saying we're going to go up higher. So we're going to continue to look up higher, right? Let's see here. I was had another chart. Let me see. Here's Riot. I'll pull up Riot here real quick. Session that I was doing with our Wyckoff students on Monday. This was the chart here. They've not discussed everything here. This was the breakout. This is what we were looking for, was the breakout here. I said this is a terminal shakeout right here, potentially, because the volume here was so much larger than what we'd had over here. And then you just, look at that. The next day, Tuesday, big pop-up. So we were ready for the breakout here. I don't know that people were ready for the big move up here, but we were ready for that breakout there to rally up. So that was good. But let's look at the bigger picture here on Riot. Again, same basic idea as coin, right? I just don't really have it drawn on here. But same idea here. You get your move up, you get your pullback. Potentially looking at this being a 1-2. It looks like a 1-2 to me. I get a 1-2 here. And then, a 3 and a 4 here is this descending wedge. 5 up. And then, A, B, C is W, X, A, B, C is Y. We're holding right here at the weekly pivot. If we do break down further, you get this low volume node here. So, we could get caught somewhere in there toward the 61.8 at $8.77. But ultimately looking for the next move up on that through all that. So, again, get us moving much higher up. Ultimately, like everything else, up here toward, the swing high, the all-time high there, and then higher. But, coin, Riot, stuff like that, still working generally the same way. We're looking at Bitcoin working. And so we just need to see them all kind of follow through, especially Bitcoin here, getting through that same area we're talking about, right? Sol, everybody hates Sol, right? This is another chart I posted not too long ago. Got our range here. We got a lot of sideways. We did hit that $30 target. We hit 33 and some change, I guess. 32 and some change, 32.13 it looks like here on Binance. And this right now just looks like an ABC down here. We've got a dip down here almost to the 70.5 was the institutional level. We've got what appears to be a descending wedge here. So, you're getting consolidation. You can note that you're getting a lot of volume down here in this area. Usually that's indicative of larger players putting in a floor. With that, kind of like what you saw here, and then it kind of comes down a little bit further in this case. But, it's them trying to show up, but they're buying a lot is what's going on here. Remember, all these big volume, down here at the low is your big players sucking up all that you guys are selling into it. I know everybody's worried about Sol, but guys, listen. Sol, I think the exchange itself is limited to 200 million a week of total that they can sell. And even within that, Sol is, 685 million or something that they're holding value. But some of that sol, a lot of that sol it has different vesting periods, right? And so they can't even sell it until the vesting period is cleared. So it's not like, oh my God, $685 million of sol is ready to be sold today. Because again, even if they were just to sell only sol, they're limited to, what do we say there, 200 million in a week. And of that, they may not even have 200 million sol that they can sell in 1 week, much less multiple weeks, right? Because so much of it is still vesting. So, you can't do anything with it until it's done with that. And some of those dates I saw were like 2025 and beyond that. So, yeah, so I wouldn't be overly concerned about it. This is why I do everything I can to try and help new traders get off the narratives, get off the stories and the news and the headlines and all this stuff, because it's just going to make you think one thing that may not actually be correct. If you're reading the charts, though, you still may not be correct, but at least you know clearly where your invalidation and validation levels are. If you're trying to do some sort of fundamental analysis or something based on news or whatever, you're going to have so much trouble figuring out, well, when exactly do you need to let go of that? At what point do you stop with the narrative? Guys, look, Bitcoin rallied up here off this swing low down here, right? Off this here, November of last year. It's almost been a year. And you still have people talking that it has to go down lower. Because people aren't really reading the charts. And when they finally do, they're trying to get the charts to say what they think needs to happen. See what I'm saying, guys? You got to be careful with that. Because it's just going to give you a whole bunch of fits as you're trying to trade. Learn to trade the charts. Learn, I'm going to tell you, all the different ways to trade get you to the same areas. There's no two ways about that. So you can learn to trade how you want to trade. But I'm going to tell you right now, what I found after, almost 30 years of doing this is that Elliott wave theory and Wyckoff method actually give you a fundamental understanding of what's going on with the players in the market. And with that fundamental understanding and that newfound belief that, I can forecast what humans do because we can, it makes things a lot easier. All of a sudden you start relying more on the charts. Even if you follow FIBO, right? FIBO's got a unique way of trading. It's threshold theory, right? But it's based in all this kind of stuff, right? It's based on the same concepts that Elliott wave and Wyckoff, use, which all has to do with that, that psychology of what's going on with the market participants and the market itself. And so, the more you can understand about that, the better all your trading is, no matter how you're trading it, no matter whether you're just using price action or whatever. Okay. So, that's my big thoughts on that. Yeah. You guys can join us at members.texaswestcapital.com. We've redone our pricing structure. You can get in, just get into our community and kind of see how we work, whatever, for $11.99 a month, $11.99. That gets you access to intraday Bitcoin, intraday Euro USD, and intraday S&P E-mini futures charts, as well as the community itself and everybody else. And we're finishing up with the price structure, whatever, and you can actually just pick and choose what you kind of want to, if you want to do something more, if you want education or if you want charts, you can kind of just pick and choose and add on there, and you're not getting stuck into just one size fits all thing. But if you are interested in getting in with us, our tier 3, that's our coaching tier, you can go to members.texaswestcapital.com and you can sign up for it at $199 a month. And again, you're going to get teaching there for Elliott wave theory, Wyckoff method, price action concepts. You can go there and just kind of read everything in there and all the other stuff you get with it. But that includes multiple times a week, live education, live streaming education. Okay. Or if you're serious about learning to trade, you can actually get it for 50% off for the year. So instead of $19.95 for the year, you can get it for $9.95. But you need a special link for that. So if you guys give me 1 second, I will get you that link, and then you can choose what you want to. You know what? As a matter of fact, I'll put it under this. I'll put it under this video when it posts here after the show. Okay. And so if you're interested in there, guys, jump in there and do it. We do have a very kind of exclusive mentor thing as well. It's a bit more expensive, but because we actually really get into the psychology of trading, and we start pushing into how everything really works together based on the psychology, and then cycles come into it as well. So y'all can do that, okay? Anyway, there you go. This is kind of the way I'm looking at, guys. You know, we look at the big picture here. We kind of look at Bitcoin to get an idea of overall crypto. You know, we look at the S&P minis, get an idea of the overall stock market. You know, we look at these things because these are the things you should be looking at if you're trading, guys. You shouldn't just be trading something and ignoring the greater market of what's going on, because you're going to get caught if you never look out and understand what's going on in the bigger market and things that ultimately are determining where the market's headed. You're going to get caught up in buying something where you don't need to buy it. You might buy Nvidia at the top, something like that, right? Rather than at the lows, or Carvana right before it pulls back, rather than at the lows we could have $1,500 in that rally, right? So that's what I do, guys. I teach y'all how to read the market so that you can be in the moves before they actually happen. If you can do that, you don't have to worry about FOMO anymore, right? Anyway, I really appreciate you guys showing in as always. I hope you have an amazing weekend. If you're in the mentor program, don't forget we will be meeting in about an hour for our weekly session there. And then if you're in the 30-day quick start trading bootcamp, of course, we will be meeting at 4 p.m. Central Standard Time. So that's 3.5 hours for our weekly session as well. And we'll get there and get you guys loaded, get you on the important stuff that you need to know to effectively, get to trading and to understand how to approach trading. So that way you can look at other systems and other styles and, understand, well, does this make sense? Is what this person's saying makes sense? Or are they just kind of half-assing their way through it? Right? Okay, guys. Hey, listen, you guys have a great weekend. Trade safe. Remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. And I will see y'all next week. Or hopefully you'll join us over there at members.texaswestcapital.com. Like I said, you get into our base level there, $11.99 a month. And you can make a ton of money off Bitcoin, E-minis, Euro USD, whatever you're looking to do there. And at least get a feel for what we do and how we do it, all right? Everybody else, if you're with us at Texas West Capital, I am moving you guys there. It's a little slow road, but we're getting you guys moved over there section at a time. So we'll see y'all later. Take care, everybody.